We wondered how we would open up today on a Monday, and remember, it's our final trading day of November. Let's dive in and take a first quick look, shall we? With these quotes provided by Bar Chart, we have corn opening lower. The March contract is down 4.5 cents at 4.29 this morning. On the soybean market, you remember we had that reversal last night where it went right after the opening bell of the Globex trade, went up and hit 11.99. And then this morning we came in and it was like 11.81 this morning at the end of the Globex market. Well, where are we now? 11.71 down 20 cents from our close on Friday. What in the world? Like the wheels are coming off here. March down 19.25 at 11.73.5. And we have heard some speculation about the wheat as well. And look at the wheat market. We have March Chicago wheat down 13 cents at 5.93 this morning, within a penny of its low. And it got as high overnight as 6.0925. That's a 16-cent turnaround just in the wheat market. Kansas City wheat has March now at 5.51 after a high last night of 5.6775. So that's almost a 17-cent turnaround. We are down 14.25 from our close on Friday. In the Minneapolis wheat market, we have the March contract down 8.75 at 5.6125. Of course, the ranges are a lot narrower on the spring wheat trade, not as much volatility. It's off of its overnight high by about 8.5 cents right now. Well, good time to bring in Dewey Strickler of Ag Watch Market Advisors in Franklin, Kentucky. Dewey, what made the grain markets turn south here this morning?
Well, it first started here, Marlon, that we did have some showers in southern Brazil, and we got some more that's in forecast here later this week. We've had a real good run in the beans. They've just been overbought. Actually, soybeans, one of the momentum indicators is at its most overbought level since 2008. So, I mean, seeing this come in doesn't really surprise me that much here. You have Thanksgiving, marks the beginning of the holiday trade, and then, of course, when that occurs, traders start closing out positions. We've had they've been long here for some time, so this is not to be unexpected. Your soybeans alone, we're due to take about a 10 to 12 day pullback in the market. So I'm not really surprised here at what's happening.
So you're looking at this much more as around a profit taking today at the end of a reporting period?
I think it is, especially on the soybeans and really on the corn here as well, too. I think we are, the next highs we make will definitely probably wrap up the long-term advance in both the corn and the soybeans for a while.
If you see a downward turn like this in some of these markets, whether you're talking soybeans or corn, or maybe even wheat for that matter, does that tend to bring out some weak longs that may decide, well, maybe I better sell some more grain that maybe I missed the top?
I think you got a lot of weak longs in this market here.
Is that applicable on all the grains?
I think especially in soybeans.
Okay, in soybeans.
You got to bear in mind, Marlon, we have not seen a sale reported to China in just a little over 2 weeks.
Well, yeah, we were talking about that this morning. I don't believe we have heard of a definite sale to China in soybeans for, I think it was about November 6th, I believe I heard, and that would be quite a while. The U.S. dollar index, I wanted to take a look at that as well here this morning, and it is lower too. So that makes it extra bearish when you look at the downward pressure you're seeing in the grain markets at the same time that we have a lower dollar. That kind of compounds the situation in the mindset of some traders. In December futures on the dollar index down 221. March is down 236 now at 91.500. Wow, pretty fair drop in the dollar. We'll come back in a moment. We'll open up our livestock trade and we'll talk more with Dewey Strickler about what's going on right after this. All kinds of pressure in the grain markets this morning, and as we just noted, we have pressure in the value of the U.S. dollar too. So is that carrying over into our livestock trade? A lot of times if you have weaker corn, that'll be positive for livestock. Let's take a look. On the live cattle first with these quotes provided by Bar Chart, even the cattle market is weaker. December down 65 cents at 109.97, under $110 now. We have February down 57 cents at 112.67 per hundredweight. Well, let's take a look at the feeders. A lot of times they're more closely related to the corn, and they are down too. We have January down 12 cents at 139.70, and you have March down 20 cents at 138.80 per hundredweight. And the biggest loss would be out in the May. It's down 60 cents, although that month is already at a premium to the nearbys. Well, let's check out our lean hog trade, and currently on lean hogs, you have the December down, up 95 cents. I guess I'm so used to saying down this morning. Up 95, and you have February up $1.27, now up $1.22 at 68.47 this morning. So that by far is showing the most strength in that February lean hog contract. Dewey, let's take a look at this from your perspective. Why are the livestock markets doing what they're doing?
Well, I think, first of all, when you look at the hog market here, we've got decent imports from China. And technically, when you look, say, for instance, at the February contract, when we set some highs here back in about middle October, the pullback here looks like a correction. So that said, the market should continue to move higher. Cattle's a bit of a different story here. Cattle market since October has traded in roughly just about a $10 range here. It's not going anywhere. Traders don't know where it's going here. We're in the middle of a pandemic that seems to be getting worse. It seems like supporting cattle has come from consumers that have been trying to hoard a little bit, and after they got that done, the market's got nowhere to go. So that's where cattle stands.
So we're looking at the February live cattle chart right now for the viewers on TV. And if you look at the feeder cattle chart, you can see the big sell-off that we had there in October and then the rally since then. But boy, it has been a choppy affair. And currently we have that January contract down 22 cents at 139.60. Dewey, thanks for helping us navigate the open here this morning. I appreciate that very much, and hope you have a good rest of the month here today. Dewey Strickler of AgWatch Market Advisors. He's based in Franklin, Kentucky. Janet, back to you.